Good morning, everyone. Welcome back to our weekly stock market update. This is your analysis on the overall market, QQQ, S&P 500, as well as the Mag 7s. And we're looking at their support and resistance levels, as well as we're looking at a lot of datas and sentiment datas, earnings, and economic datas. So pretty much SPY ended up closing, went to new all-time highs this week, but the Qs are starting to form potential head and shoulders. So we'll see who ends up winning out because the Qs are usually the one that leads both sides. So if the Qs ends up forming a downtrend this week, next week, sorry, then we might see SPY potentially starting to chill out as well. That being said, we're still getting slight rotations between sectors, right? You can see the financial sector actually closed pretty green this week. This is the 5-day average for all the sectors in SPY. Energy was really strong. All you don't want as a tech bull, you don't want to see energy being too strong, but a little bit of rotation is nothing too concerning. You can see even XLK this week closed flat. Right, Nvidia was red after reporting earnings. Slight bull trap look we had on Thursday and Friday. We'll take a look in the charts later as well on Nvidia. And Apple was green. So nothing too concerning here, right? Still getting a little bit of rotation. What you want to see as a bear, you want to see all these sectors being red at the same time. That's kind of like money leaving the market. You get that fear. At the moment, we still don't have that yet. There's like AI sentiment data. You can see this week is pretty neutral, I would say, right? 30s, 20s, and 30s. Last couple of weeks were a lot of bears, and you can see them getting like squeezed out probably in the last 2 weeks. So keep my eye on watch. And if you're greed index, still in greed, nothing too extreme at the moment, right? If we start heading to extreme greed at these levels, then potentially we may have a short play. But at the moment, this is still pretty not really as helpful. There's earnings. A lot of Chinese names here this week, but the thing I care about is ABGO. Broadcom can be a slight market mover. You can see its weightings is quite big, right? In XLK, it's pretty much 5% of XLK. So it also moves the semiconductor sector as well. So keep eye watch on that. And economic data. Monday is a holiday, so no trading there. And a lot of data this week, right? PMI, JOLTS, a lot of jobs numbers as well. AD farm payroll, so and unemployment data as well. So keep an eye on watching this for sure. This is pretty jam-packed jobs week. We have been getting that. Last time our jobs was pretty darn bad, and that which sparked the rate cut that for our September rate cut to be around 90% ish. So if this one comes in bad, maybe we'll get a 50 basis point cut, but we'll see. So it does look like there's a slight tick up. The forecast saying 4.3 from 4.2, but that's where we've pretty much been jumping around for the past couple months. Excuse me. So if it's 4.3, I wouldn't be too alarming because we've been jumping between 4.2, 4.3, bobbing around there for a while in like the past half year. But if these ones, ADP and all these PMI come in bad, jolts, and then you get this 4.3, and I think market's probably gonna go pretty red. So yeah, just be cautious when these data mark comes out. All right, let's take a look at the charts. So QQQ here. I talked about this last week, saying we may potentially form a head and shoulders, and we ended up pretty much just coming to this resistance, right? Very clear resistance here around this top, which we pretty much rejected. So we kind of formed that look. So in head and shoulders, nothing fancy, right? You don't need a picture perfect head and shoulders. It's just a uptrend into a downtrend, right? So for this to be a downtrend, it needs to break this pivot. This low, this Wednesday, August 20th low is at 5 by 8.84 for the Qs. So if this low breaks, that's a confirmed head and shoulders and into a downtrend. And then for the bears, you want to break this low, right? This August 1st low. And we zoom out to the monthly charts. We're talking about this line saying it does look like the monthly it's going to close within it, but it did close above it slightly. So, but we can keep it just for fun, right? It's prior all-time high rejection, prior all-time high rejection. and we're getting like both of these months are getting slight selling right in these areas. You can see all these upper wicks, right? Got some selling here in the last month, and got some selling here in the last month. So maybe the next month rolls over, I would say this line is still valid for visual guides. So not for like going all in, you know. Um, so yeah, let's see if bears ends up showing up September next week. And yeah, I mean, we just had one red day, so nothing too crazy, right? We had this run up and then sold off, right? So it's slightly, sorry, it's slightly a little bit of a red flag, right? Where you kind of like poke above this high, a little bit of a bear trap, I'm sorry, bull trap here, right? You also broke this resistance as well. These multiple top at these 573, broke above these pivots, hits there, and then just absolute sold off, rolls over. But so what do you want to see as a bear is you form that 4-hour lower high, get a weak bounce, break that, confirm 4-hour downtrend, kind of like this, right? 4-hour downtrend confirm, and then you get this follow through. But this time you want to get the follow through to break this pivot to form even longer term downtrend into a daily downtrend, right? You may also get something like a tiny range, right? On the daily, right? So big move up, big move down, big move up. Let's say we don't break this pivot at the initial drop and then we bounce here, then it's going to become a tiny range. So likely tying into probably if we get a bounce on Monday and then that's right, Monday drops, sorry, Tuesday, Monday is a holiday, Tuesday drops, Monday bounces in a tiny range, then it might become more of a tiny range to wait for more of those economic data to come in for the larger moves. Potentially, you might wait for like that end of the week unemployment data or something to come in to decide if the market wants to roll over or stay in this range. But that being said, longer term picture, right? Monthly consolidation is due. So consolidation just means it will break the prior month low, which we have not yet in the last 1, 2, 3, 4, 5 months. So even if we pull back all the way to 537, which is prior all-time high here, back test there, it's a perfectly healthy chart, right? It's going to be like what? It's not even going to be, it's going to be like if we come back to 533, it's going to be like probably like a 30% retracement. So of this entire move. So that's like extremely healthy. And just if we come back to the yellow box, 513, that's still a monthly bull flag, right? It's going to, and it would be pretty much back testing also this high. So yeah, so wouldn't be surprised even if we pull back to 514. That being said, bears need to show up, come from a daily downtrend for me first, right? We've been talking about this. Can bears confirm daily downtrends this entire way up, right? This entire way up, nobody should be shorting at all because bears never confirmed anything. The only time you started shorting here would potentially be over here. After this initial big move, you may potentially look for that lower high, and you probably got stopped out right away. And then this drop as well, and this would be the second week where you look for that short, and it would be on Friday, right? Every day is a move up, and this is Friday was the first day it broke the prior low, so you would short there and put your stop loss over here. So you still be currently being in it. So this will only be the 2 times that you short on this entire way up, versus trying to nail a top, right? We don't nail tops or bottoms. So, all right, let's look at SPY. If you guys learn anything from the channel, feel free to like, share, and subscribe. It always helps the channel out and doesn't cost you guys anything. And let's continue with SPY. So SPY made a new all-time high this week, right? We can call this a lacking follow-through because the Qs are a little bit weaker. So SPY is not going to go anywhere much higher if the Qs slow down because XLK is pretty much the biggest weighting, right, in SPY, which is the Qs. There's also resistance here as well, right? You can see these top reject, reject, reject multiple times here. Um, but I care about price action a lot more at the moment. That being said, no red flags at the moment. It is slightly looking like a rising wedge, but for me, I want to see the Qs come from the downtrend and SPY get that no more rotation in them. SPY continue to get a rotation as the Qs goes down a little bit, right? And then you have the financial sector, right? Bright green or something for next week. Then this guy is just gonna go probably sideways and no red flags. At the moment, let's see if the bears can show up. That being said, every week I said, right, we do this. Well, we want to see bear momentum from the bears, and they never do it, and bulls just continue going up. So that's why I say following the trend is so important, right? If you continue to just follow the trend, right, play with the trend, zoom out to the larger time frames, and wait until the opposing side shows signs of advancing, then we can flip to the other side. Currently, tops usually takes a lot longer to form than bottoms, so be a little patient. But we're seeing signs of resistance, right? This is the first time we see sideways action versus like this kind of ripper up move, right? So we can see this area is currently acting as resistance. But even if it acts as resistance and goes sideways, it can still break out. So don't just mean that if it goes sideways, it's definitely going to roll over, but we'll have to wait and see. So we want this to end up becoming a distribution zone. That means we got to roll over and below it, back test the resistance and go lower. For now, that's going to be a couple weeks if that does happen. So we'll take it one step at a time. All right, let's take a look at Meta to give us more clues to see if the Qs will break down or not. We'll take a look at the Mag 7s because the Mag 7s are the biggest weightings in the Qs. All right, so double back test of the prior all-time high, bounced in the last 3 days. Now we're testing it again. So if this breaks down, then that's a daily downtrend. So I talked about this last week, saying a Meta is the weakest chart because of the size of the drop and has a ton of space to come from a downtrend. And it looks like we got a very weak bounce for the right. Qs were up pretty much every single day this week except Friday, while Meta is just forming a bear flag and barely bounced. So yeah, so Meta looks like it wants to come from a daily downtrend first out of all the charts. So when this does come from daily downtrend and rolls over, fills the gap, then it's going to drag down the Qs. So keep my watch on these guys. I wouldn't be surprised if this gap is filled. It's a very key support, 734. Our all-time high, acting on support. So if it breaks, we're likely going to flush to 716 and then go to 700. For bulls, defend that area again, then bounce back up to 762. Then you have a chance back to all-time highs. All right, look at Tesla. Okay, so it tried to form, it tried to continue on a weekly uptrend, but it looks like a no follow through, right? This is the low, this is the higher low, big up, retrace, higher low, higher high. So that's a weekly uptrend confirmed. Not much follow through. Pulls back, forms a new higher low, bounces again to a new high, continuation of the weekly uptrend, and not much follow through again. So it is showing like these levels, 352s, can't get over these pivots. It's showing signs of resistance, and this is a long-term equilibrium breakout as well, right? So we've been in this tightening range for a long time, and when breaking out and this is all you get, then this is starting to look like it wants to go the other way. Yeah, it's not breaking any of these pivots. So you guys, remember we're talking about this tightening range for a while. saying when it breaks out, I want to see it break these pivots. Doesn't have to go like all at one go, but at least get a strong move, weak pullback, and then go for the momentums. And it's currently looking like it's not wanting to do that. So we are still holding these higher low pivots, right? Each low is a higher low, higher than the prior low. So that's still a good sign. What will be a red flag for me is this comes another leg down and break this first pivot higher low. So that would mean the trend is gone. The uptrend is gone, and that would create a lot of space for bears now to confirm a daily downtrend, and potentially to retest these lows, which I starting to think is likely due to these multiple rejections up here. So, as well as the market potentially topping out, showing signs of maybe topping out. I'm not saying it's gonna top out right there, but so also market's been going straight up, and Tesla went sideways, and now market is going sideways. Right, it's not really helping the Tesla as much anymore. One red day on the Qs, it was like 1 point what? Let's see, it was a 1%, and Tesla was down 3.5. So that's not a good look. Yeah, we'll call that relative weakness. So what if Qs have a 2% down day, right? Is Tesla gonna have like a 5% down day? We'll have to see here. So far, no red flags on the charts, but I'm not liking these no follow through, breakout, and relative weakness here in the last 3 days for Tesla. All right, let's take a look at Amazon. So Amazon pretty much picture perfect tiny range. Big move up, big move down, big move up. Doesn't break the prior highs, doesn't break the prior lows. Another big move up, right? Doesn't break this high either. And we have one down day. So if we get red week next week, we might come down here around this to 222. And if we don't break this pivot low at this 220, then we might continue to tighten up. So, but if we are going to get any kind of bearish, like a large size bearish move, we got to initially break this, initially break these pivots, right? 220 first, and then we're looking at 218, and we need to break this 211 for any kind of larger outsized bearish moves. Oh, we got to have some support here, right? Prior resistance, 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 support, support. So if this continues to tighten up, maybe it'll like, if it breaks bear, we want to see it break all these pivots at the same time, and then test this green line, break this green line as well. But for now, it's just going sideways in a tiny range. So say it's team neutral. Clear resistance. Right, just coming going lower. All right, let's take a look at Google. So Google is team bull. Talked about this last week. I said this was an upper wick, and you can call it no follow through, but I wouldn't call it. And I said I wouldn't call it no follow through because it's you can just follow through the day after. So what you end up doing, right? It's a nice move up, the new all-time highs, and daily uptrend still intact. So no signs of red flags. So Google's team bull. Right? You can see very clear uptrend, very very clear uptrend. Higher lows and higher highs, and no red flags. That being said, what if Google, right? Google takes a break, have one red day, come down back down here, and everyone else drops too. Right? Meta forms a daily downtrend. Amazon just have one red day too, just tighten up. Then we might get one more red day, right? In Qs. That's no big deal, right? We've seen 5%, 10% drops on the Qs just for healthy consolidations. But yeah, so no signs of red flags at this moment. But if we zoom out to the monthly charts, right, it's due for consolidation. 1, 2, 3, 4, 5. So I wouldn't. So September will probably be more of a chill in the sidebar, maybe something like this or a red one, right? And then we might get some consolidation around here, September, October for Google. And it looks like a broadening wedge as well, right? So this is the pattern everybody hates because it breaks the new highs and no follow through. It's not picture perfect. I'm just showing you guys the megaphone. It's kind of like, let's get these like new lows, new lows, new lows, no follow through. New highs, new highs, new highs, and it doesn't follow through and come back. Something like that. So it's like a megaphone, which is, I likes this pattern because everybody gets stopped out on both sides, or people start to go long here after it breaks out, and then reverses. The same thing. Yeah, right. People start to go short again, and then reverses. Short here again after it breaks this pivot, and then reverses. So that may be something to watch for. But if you align this a little bit higher to this, more like here and here, it still has a little bit of room to go. So let's see, about another like 2.5% to go if you want to picture a perfect megaphone. So we'll just put it there just for fun, see if it actually reaches there and rolls over. Yeah, just keep it as a visual guide, right? These are the tops, or we can line the line onto these pivots, which is a little bit more data, but we'll just keep it here at the top. Yeah, Google Team Bull at the moment, and Microsoft Team Bear at the moment. This is pretty much what a blow off top looks like. After this all-time high, confirm a clear downtrend and follow through on the downtrend. So finally broke the support and then rolls over. Now it's bobbing sideways. But didn't really break any key. I mean, there's no real support along the way up here, really, except this little sideways here, little bit of sideways here, which we can see this low, this 498 low is pretty much marked from this exact top, right? This 499, 500 mark resistance now acting as support. So yeah, so this is what weekly consolidation looks like. Right, one weekly straight move up, and we got our weekly consolidation last week because this candle went lower than prior candle, and it's just continuing to consolidate at the moment. So I mean, no signs of rough flags. If you zoom out, right, this is we only retraced 23% of this weekly move. So if it comes back down all the way to 478, it's a weekly bull flag. So I wouldn't be surprised if we retrace a little bit more next month, come and get a little bit of a monthly consolidation, right? Break below this month, because yeah, we still got a ton of room, and coming back to 430, 473 is still a monthly bull flag. But bears has been in bear control for the last couple of weeks for Microsoft, so it's Team Bear. All right, let's look at Apple. So Apple definitely is a legger bull after it breaking out from this resistance that we're looking at for months, resistance support. Clear breakout. Now it's going a little bit sideways in this range, which not surprising. It's went a little bit sideways here forever as well. So once if market starts to pull back next week, then Apple probably going to go sideways here as well, pulling back a little bit like this. But for now, it's still in a very strong. This is looking like a weekly bull flag here. Could be daily, weekly bull flag. Very strong move at the moment. So if we want to show any kind of weakness in this chart, bears want to definitely reject right here. You don't want to break this prior high at this 235. Break down lower here and break this 223 low. Then you'll confirm a daily downtrend, and that's where you get that chip chop coming in. If you guys bears can do that. For bulls, if you guys can break this 235 high, there's a solid chance where it can come up to test the all-time high structure. But the one we're seeing some resistance at 233. I can see Q's was down 1%, and Apple held up itself. It was flat for the day. This is what we call relative strength. So let's see if Apple continues its relative strength, because it was a lagger bull. After everybody's making the all-time highs, Apple did nothing, and it's playing a little bit of catch up now. So, all right, so Nvidia. So this guy reported earnings this week, and charts finally looking a little bit not as strong. I mean, there's no red flags here, but obviously we're not trending like crazy anymore. Right? You know, like this higher lows and higher highs every day. A little bit of the red flag for me was just an initial red flag where after earnings, it was a bearish reaction, and then the next day we had this pop right back up to this kind of like this. It was like a liquidity grab, right? Come up right back to this 184. Did we poke into a new high? 184.4. No, just shy of 1 penny. Yeah, probably stop a lot of people out though, because a lot of people probably put their stop loss above these highs, right? And then this one right here is like 48. This one's just 1 penny right underneath it. So probably popped real high, stopped everyone out, and then rolled over. So we're looking at a little bit of a bull trap on Thursday here. That being said, we still have not broken support, right? Resistance, support. You can see the earnings reaction low was pretty much off the support as well. Very clear. Support, 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 support. So for any kind of bear follow through, we need to break this support around right at this 171.8. If we can break that, then we're probably coming back down to 168 and then back test this 165. Yeah. And honestly, there's not a lot of support between if we crack this 171 support, there's no real support until you come back down to 153 to this prior all-time high structure here, right? This move up is a straight up move. You can see there is not barely any support built along the way, right? Every day is just a up day until you come to here. A little bit of a structure here, right? This 158 high, and this low is marked from this low. So if it comes back down all the way here, I wouldn't be surprised. Let's take a look at the monthly chart to see if it goes all the way down there. What the retracement is. So let's just say it's a healthy pullback to 152. Yeah, 152 is it's like what 35% pullback. Not a 35% pullback, a 35 retracement of this move. So that's nothing, right? That's super healthy. Above this yellow box is still a bull flag, so even when we come up down to 147, it's still a monthly bull flag. It might feel like if you're in it, if you buy anywhere above 147, you might feel like the stock is crashing, which is a very reasonable feeling because you're gonna be down 20%. But it's a monthly bull flag, so even if it comes back to 146, I'm not saying it's gonna stop. If it comes down all the way to 146, I'm not saying it's gonna have to bounce at 146. What I'm saying it's even if we come down to 146, it's still healthy, very healthy consolidation, very healthy pullback. So, and that being said, if it's even if it's a very healthy pullback, it's a 20% pullback. So just be cautious of your position, and be wary of that because we have such a huge move straight up in the last 5 months, right? 114%. So even a healthy retracement could be very, very large. So be cautious of that. All right, that being said, let's see the bears can prove it finally this week. Right? We're talking about trying to bears to prove it for every single week, and they don't. And they just, bulls just continue to grind. So and that's why you usually play bull on the bull side, because you will likely win a lot more if you're a bull. But we do get these periods of sideways and then roll over, which is very common after a very strong move. So yeah, so be cautious of that. And I'll be doing the commodities update tomorrow. And feel free to like, share, and subscribe and help the channel out. And if you guys are looking for more strategies and how to trade, check out the Patreon link or for one-on-ones. And we'll see you guys tomorrow for more commodities update.